Good afternoon, everybody. Uneducated Economist here. Got my man Tony Lopes from Dirty Boots Capital. I love the name of the channel. I just absolutely, and you know what I realize, Tony and I, we met like back at the Rebel Capitalist about a year ago now.
Yeah.
And I just realized I wasn't subscribed to your channel. I'm sorry, man. So I just subscribed to the channel. So now I'm getting the videos, and
I think I gotta go. I think I gotta go now.
I'm so sorry, man. I don't know what happened. I know maybe YouTube unsubscribed me. I'll just blame it on them. But I found Tony to be absolutely one of the coolest guys at the Rebel Capitalist there. He was so friendly. He came up, was very engaging in conversation. And I found that, the things that you were talking about just were so in line with a lot of the stuff that I was thinking as well. Tony, do me a favor, introduce yourself to the viewers here who haven't met you yet, and let them know what you're up to and what you're doing.
Yeah, well, first, thank you for having me on, Simon. I truly appreciate the opportunity. So yeah, my name is Tony Lopes. Like Simon mentioned, I started the company Dirty Boots Capital a few years back, and that company is truly to help the everyday person out there. That's why I called it Dirty Boots, right? I didn't call it white collar or white shirt capital. It was truly meant to be for folks who go out into the working world, get their boots dirty each and every day. And those are the people I serve and look to help to create generational wealth, create some additional cash flow for themselves, and just generally try to help them have a better return on life for themselves and for their families. So that's the genesis of that. And I know we're going to get into a lot of different conversations, but I really started following you, Simon, a few years back. And when I was starting to study macroeconomics, I'm going to call it, right? Because a lot of things back in, like, I would say going back to like 2018, I saw things happening and I said, well, okay, if certain things are happening, I have a certain expectation that the market is going to go down, or the stock market is going to go down, or that we're going to have a recession take place. And it didn't. And I started to question why these things weren't happening like they historically would. And so I saw some nefarious things happening within the government, within the Federal Reserve, right? That was preventing certain things that needed to happen in a economy, right? Having a recession in an economy is not necessarily a bad thing, right? Having a recession flushes out bad money and in comes good money. So a recession is not necessarily a bad thing. It's something we have to live with, right? It's kind of like getting a cold, right? You get a cold, you live with it for 2 or 3 days, you take some medicine and you get over it, and you're feeling better, right? But they weren't allowing that sickness, that recession to actually happen, right? And so we're in a very dangerous place right now, where we have a lot of businesses that are what's referred to as, I'm sure your audience is familiar with it, businesses that are referred to as zombie companies, right? And that's very we're in a very scary place right now, because upwards of, I think it's, last time I checked, it was about 25% of the companies out there, 20 to 25% are zombie companies, which are companies that can barely pay their bills, right? So they're just being kept afloat with all the recent free money, PPP loans from the Federal Reserve and from the government, right? These companies have been kept afloat for a long time. And when things go bad, which they will eventually, just a matter of time, we're all watching to see how bad things get and how long that, let's call it, a recession is going to take place. So I've been studying macroeconomics for a while, not to be long-winded about it, but that's really been my background over the last 4 years, which has gotten me into a lot of teaching, so to speak, moments to try to help people understand these things. As you and I know, it takes a lot of time to research articles and news stories and listen to others to understand what's going on. And not a lot of people have time to do that on a daily basis, right? like I say, my clients who get their boots dirty each and every day going to work, right? They're busy. They got to go to work. They got to take care of the family. They got to shuttle the kids around. They are very busy people, and they don't have the time to dig into things. So that's where I compliment you, Simon, on your channel. I compliment folks like George Gammon on his, and others who are out there seeking to educate the masses, because it's difficult to find truth in the data and in the news stories. And the work that you guys are doing is top notch. So it's just such a pleasure to be here with you today. And that's a little bit of my background.
Well, thank you very much, Tony. I appreciate you filling in our viewers on what it is you do and who you are. So now I like to go back prior to the pandemic when, before things got crazy and obscured. Now you're involved in the real estate market, right? So you have your eyes on that as well. So tell me, like, what was the attitude of the people? Like, what was kind of the perception of the people just prior to the pandemic? Like, there was the idea that we were going to be rolling into a housing market crash or an issue or something. Like, what was the feeling that you had just prior to the pandemic taking place?
So prior to the pandemic, I would say making money in real estate was relatively easy, right? You didn't have to worry about migration patterns. You didn't have to worry about rent controls, right? The government coming in trying to solve people's problems, where the government shouldn't be meddling in, right? You didn't have to worry about that government intervention, right? So it was a pretty good place we were in. We were making good money in real estate. We were taking calculated risks because, right, like you said, going into the pandemic, a lot of us were looking at it saying, is a recession on the horizon? But we were still investing, right? To be a real estate investor, you always have to be in it, right? And the market fluctuates, and where it makes sense, we were jumping in. But after the pandemic, uh, it was just, there was so much interference caused by the government, by the Federal Reserve, by a lot of free money, that came to businesses, that came to homeowners, that came to families, that prevented that recession from actually happening, right? And a lot of programs that came out of the Federal Reserve that allowed the Fed to buy mortgage-backed securities, right? And so now there was less risk on the banks in terms of writing mortgages, because now they could just write those mortgages, not really, I'm going to say not really care too much about the risk, because they were going to roll those mortgages over onto the Fed's balance sheet, right? So things got pretty crazy there in terms of a lot of money flowing into real estate during and immediately right after the pandemic. And yeah, so it's kind of put us in a position as to when is the shoe actually going to fall on this market, right? And so we're facing into it right now, right? We're real estate investors. We're always looking to invest, but we're kind of looking at it this way, right? We're looking at these three different categories of, let's say, home. There's the home builder, right? There's the home buyer, and then there's the investor, right? And so I'll break down those three categories. So the home builder, they need to sell. They're in a position where that's their business. They're actually looking to profit from building and turning over these new homes that they have, right? Okay. Then we also have the home buyers who, over the last couple of years, have been securing mortgages in the 3% interest rate range, right? And so are they going to be selling their current homes to buy new homes and to pick up a new mortgage at 6%, right? Probably not, especially if they too are reading the tea leaves saying, ooh, we might be going into a recession. I might be losing my job. My hours might be cut back. I might not get an increase this year. people are pretty savvy out there, right? They know what's going on. So as much as the politicians and the Federal Reserve want to talk about how this isn't a recession, I think you and I and the viewers do know we are in the starts of a recession here, right? So we have these home buyers that probably won't be turning over their homes anytime soon. For sure, there's always new home buyers coming in, but that's a smaller percentage, right? And then we have the category of investors who are investing in real estate, right? And so from my perspective, I will share with you, I deal with investors, and I will share with you, I'm working with one client now. He has $20 million to place in real estate, right? So we have investors that are sitting on cash, ready to pounce, right? In another 2 weeks, I'll be at a family office where they deal with high net worth individuals, right? I had a conversation with somebody who invited me to this family office event because we were having these great conversations about what's going to happen next, right? When's the recession going to start? How deep is it going to be? Right? All these types of conversations we're having now, I was having with him, and he said, "Hey, we got to get you, into this family office. We got to be talking about these sort of things and try to understand what's going on out there." And so here we have, these family offices with ultra high net worth individuals, people who are, in the families with like $50 million, right? Those are the ultra high net worth kind of people. And so they too, have money to invest in real estate. So the money's out there. Basically, what we're waiting for is to see what happens with these home builders, right? And that's one area that I've shared with many individuals, right? That I work with, the boots on the ground, the families that have to go to work each day, shuttle the kids back and forth. That's what I share with folks. I say, guys, here's what we're looking at today. We're looking at the home builders to see if there's going to be a deeper crack there, and they are going to have to start selling their homes, either partially completed or fully completed, brand new homes at a deep discount, right? Because they have to get those homes off the books, right? So that's an opportunity for the folks that I serve, right? The boots on the ground. And I say, guys, prepare for that now, right? I've been saying that for a long time, right? At least a year. I've said, pull a home equity line of credit on your home, right? That way you're not paying the mortgage, that interest on a home equity line of credit until you actually pull those funds, but actually secure it with the bank, actually have that funding available for you in the form of a home equity line of credit, right? Such that if you have a builder local in your community that is drowning, you now have the funds, the opportunity to go in and possibly buy that home for 50 cents on the dollar, 75 cents on the dollar, because they want to be out of that home, right? So that's one opportunity. Another opportunity is I share with folks, people who work in the corporate environment or manufacturing environment. A lot of these folks have 401ks, right? Take a look at your 401k program to see if you can borrow from your 401k. Most programs allow you to borrow from your 401k, right? Understand that. Get those dominoes aligned right now, such that if there's an opportunity in your neighborhood, right? Because the best real estate to buy is, for people who are starting out, buy locally, right? There's nothing better for an individual than buying in a location they already know, they already understand, right? They know if there's a big renter pool, they know if there's a big manufacturer in that area that's going to draw people to that location, right? So they know their home location. So that's a great opportunity for people who are looking to grow their wealth and their cash flow, is to take a look at these home builders who might in the somewhat near future have to be selling at a deep discount. And you're in the business of helping supply these home builders. I'd be curious what you're seeing on your end, Simon.
Actually, that's That's something that I had just one of the recent videos I had done with Keta from Madison's Lumber Report. She's out of Ontario and she does the analytics report for like all these mills and distributions and everything. It's like, I don't know if you've ever heard of Random Links, but she's like a competitor to Random Links Report. And some of the things that we're hearing or what we're thinking of as far as what we're seeing from the lumber side of things is there is a dramatic slowdown in the demand for lumber. And at the same time, there's also a dramatic slowdown in the production of lumber. So there's a lot of mill curtailments and the builders are backing away from the new builds right now. You can see that in the starts, the new home starts and the permit issuance. You know, it's down comparatively to the last 2 years, but really those two numbers are still quite elevated comparatively to the last, you know, few years prior to that. So as far as like a huge drop off in demand, it's starting to take place that you can really see the new starts or the what can I say, like the interest in starting a new home project right now has very much kind of stepped away from the game. And like you say, they seem to be standing on the sidelines waiting for that opportunity. The only thing that I have found is that right now, I just don't see where there's ever going to be a better opportunity to buy framing lumber than right now. And the savvy builder is probably going to recognize that, you know, within the industry that, you know, if you're going to frame a house right now is your opportunity to do it when nobody else is doing it, although you'd have to be really kind of taking a pretty big leap of faith into that, thinking that there's going to be an opportunity to sell that house into the future. So there is a lot of uncertainty that's taken place. The builders are not real eager, but you can tell that they want to bite, right? Because I mean, the way I see it is that a home builder has to build, like that's their job. Like they can't just stand on the side, you know, stand away and just wait forever. I mean, they got to at some point get in the game or else they don't eat. So it's just a matter of time before the pressure starts to build on it. But that's kind of what I see happening right now. As far as the rest of the year, like into February, that's what Keta and I both kind of had this feeling for, is that sometime around there, we're going to start seeing the demand pick up, getting ready for that new building season coming in as, you know, the winter comes to an end and the summer starts and that new building season starts. So we're kind of waiting till there to see what happens in February with everything. That's probably going to be a lot more telling about what's going to happen into the next building season. So I'm just basically telling people that they absolutely need lumber to not hesitate to buy it now, even if you can store it for a little while, because I just don't feel that the opportunity to buy lumber cheaper is going to present itself going into the future from here. Like now is your time.
Yeah, and I love that perspective of sharing opportunities with folks, and you kind of jog my memory here. So I shared with you privately, but I'll also share with your audience. So I have a location up in New England that I work out of, but I just recently started a second office location in Florida, right? And so where I'm at, there's a community where they're supposed to be building upwards of 6,000 homes, right? And I've been down here off and on for about a year, right? Maybe a little longer. And the speed at which new homes are going up is very, very much slower today than it was a year ago, right? So that's all in line with what we're saying. So where I see an opportunity here is, and maybe your viewers may see some opportunities in their neck of the woods where some new subdivisions are going in. And so I'd love to see that, you know, from your viewers in the comments, if they're finding the same thing in their area, you know, with the slowdown. But also the opportunity may be the home builders who own these tracts of land that have already been subdivided for these cookie cutter homes to go up. They may be willing to sell lots, right? So you may not have to be a real estate investor, right? To, you know, I get it a lot of times. People don't want to be a landlord. They don't want to rent a home. They don't want to build a home, whatever it is. Okay, well, maybe being a speculator, so to speak, in terms of being a land buyer, right? These are tracts of land that have already been subdivided, right? And these home builders, instead of selling homes to get cash for their business, maybe approaching them to say, hey, let me buy one lot, let me buy two lots, right? That will give them a small cash infusion that might make them say yes to that deal that you're bringing towards them, right? And having land, that's like money in the bank, right? The land can't be destroyed, right? Chances are, if houses are going to be built up around those lots, that's going to make your land more valuable at a future date, right? So I think that's an interesting play today. Again, going back to the home builders who might be falling further and further into trouble here.
Hmm. Yeah, that's something interesting to think about because that actually occurred right here. There's a little set of houses called Mill Pond. And I remember when they first started selling those lots, I thought about it then. It was just like, because they were really cheap back then, they were brand new to develop on. And I thought, man, I should buy a couple of those if I could, and of course, it would have been all the money I had at the time. So, of course, I wouldn't do that. But today, they would have been worth so much more money,
Yeah,
just like they would have been the
yeah,
last two, that haven't been built on or something. And, would
yeah,
have been worth a lot of money. And so,
and you're right. And when it is the last two lots in a subdivision that haven't been built on, they go up in value, right? So it's just a matter of waiting it out, so to speak, right? The money's always there. That's why I say it's like money in the bank, right? It's a good purchase. You just wait for the rest of the homes to be built, and then you be the last one to sell those two lots to a home builder or back to a general contractor to build a home.
mhm. so, so it sounds to me like you're kind of on the idea that there's going to be a significant downturn in real estate and to be prepared and to take advantage of that downturn.
Absolutely. Yeah.
And
Yeah. You
what?
know, I mean, it's always watching and you know, seeing what's happening because it's so manipulated these days uh that like I said, since 2018 I've been waiting for certain things to happen and they haven't because the government steps in to save government businesses and to save people, right? Where the government should not be stepping in. And then also the Federal Reserve stepping in to offer programs they should not be offering. So is that to say, in Q1 of next year that they're gonna sit on the sidelines? I don't think so, right? The housing market is a huge sector of our economy, and it's a huge sector in terms of our GDP, right? Jobs, material, right? Natural resources, right? It's a huge segment of our GDP. I don't have the numbers in front of me, but you know, the way housing goes is the way the economy is going to go. So if housing goes south deep, um, the economy is going to go the same way. And I don't think the Federal Reserve is going to let that happen. And I don't think the politicians are going to let that happen. So it's a wait
Yeah,
and see game.
it really is a wait and see game. One of the things that I have been saying for quite some time is that that the Federal Reserve is not taking on the strategy that they once had, in which that they shoot for a 2% inflation target, where where the Fed's funds rate would be adjusted to maintain a 2% target. That's not really what the Federal Reserve is doing any longer. They have changed that 2% target to a 2% average over time. And a lot of people haven't taken that strategy on yet. They still are hearing the 2% target that the Federal Reserve is shooting for. So when we think about the 2% average inflation over time, they don't really specify exactly what that means. But if you listen to their statements, like just the recent one that Jerome Powell had said, he says that they're going to keep interest rates elevated to, combat to the inflation. But the way he said it was until they have achieved their 2% over time. And he was careful to choose those words. And he said it just like that 3 times when he said it in that speech. It's because he wanted to make sure that everybody heard that it was a 2% over time and not a 2% target. And when people hear that, they think a lot of times it's a 2% target and it's going to take some time to get there. But that's not what he's saying. It's going to be a 2% average inflation over time. So what I'm going to hear is that once the Federal Reserve has hit their target of 2% inflation, they're going to keep interest rates elevated on the Fed funds level for a significant amount of time after that. And that's the strategy I don't think a lot of people are prepared for. And that's probably going to be the buying opportunity right in there is what I'm assuming, you know, and it's going to be what I'm guessing going to be short-lived, you know,
Yeah,
that
so
maintaining of elevated interest rates while the inflation is down.
so it sounds like, so I won't lead the witness in this case, but
Yeah, go ahead.
I'll say, so I'm in the camp of continued near-term inflation into 2023. And in 2023, we're going to see stagflation is my thought on the deal. Right now, the Fed can come in and try to reduce their federal funds rate. Right, they're already saying that, you know, after the last, you know, 75 basis point hike that they did going in December, they're looking at a 50 basis point hike, so they're looking to lessen the blow. But at the end of the day, if the economy is going into a recession, and this is, I think, is an important thing to watch, right, for all of us. If the economy is going into a recession and you see companies continue to lay off people, and the opportunity for the banks to no longer sell back mortgage-backed securities to the Federal Reserve is no longer there, because it's no longer there right now, right? Do you think the banks are going to be writing mortgages to people that may potentially be laid off in 3 months, 6 months? I think those banks are going to start, regardless of what the mortgage rate is. The mortgage rate can be 3%, right? I don't care what the mortgage rate is. But if the bank says this person may end up in foreclosure in 3 months and 6 months, they may not be writing that mortgage note to that person. So I think they're going to get much more strict. The banks, that is, get much more strict in their underwriting guidelines, potentially. And that may hurt the housing market as well, right? From that perspective.
Yeah. You know, and I kind of have some thoughts on that one as well. As far as the mortgage-backed security issuance goes, you know, during the pandemic, everybody was rolling over their old debts into new debts, you know, taking advantage of those low interest rates. And that created a lot of brand new loans onto the market that were able to be packaged into mortgage-backed securities for the Federal Reserve to buy. Now that we're sitting in a situation in which that there's less mortgages being issued because of, you know, the current situation we're in with the high interest rates and people are fearful of the future, and the less opportunity for people to roll their old debt into new debt with the higher interest rates, that doesn't create a bunch of new mortgages to put onto the market, like you're saying. With the lesser amount of mortgage-backed securities coming onto the market, even though the Federal Reserve is unwinding their balance sheet with them, those are fixed incomes that a lot of investors are looking for. And although like mortgage-backed securities do have a bad rap for, you know, the condition that happened back in 2008, you know, with the mortgage-backed security toxic asset issue, the mortgage-backed securities today don't really hold the same like toxic asset kind of, you know, credit like they once did. You know, it was like,
Yeah.
they were really bad instruments. So today the mortgage-backed securities that are being written are a lot more sound investments for these fixed income investors. And when you think about, like, you know, all the fixed income that's out there right now, mortgages are probably one of the few things that are actually going to get paid. This leads me to believe that as that diminishing pool of mortgage-backed securities continues, eventually the price is going to fall to where the investor is like, man, that's my ticket. That's where I'm going to buy in. And will that add the support to the mortgage market at that level? Kind of makes me think about, like, how come we don't see the mortgages going up like dramatically when you think about the Federal Reserve continuing with their Fed funds lifting? I mean, they hit that, what, 7 to 8% at the peak, but they don't seem to really go much higher than that. They peak up a little bit, but then they tick back down. And I'm wondering if it isn't from that shrinking pool of mortgage-backed securities out there.
Yeah, I mean, I can tell you right now, I mean, the high dollar investors that I do work with, right? Because I do work with some of them, they're in treasuries, right?
Are
They're
they?
just, yeah, they're just parking money right there for now, right? Because that's pretty much guaranteed money. You know, sure, they may be getting, you know, only 4%, but it's liquid, right? They can they can turn that pretty quickly. So if the market does have a quick crash in the next, 30 to 60 days, they're liquid. They're in a good position, right? So I'll just share that from an insider's perspective of where the investors are that are
Yeah.
sitting on some decent cash.
And that's another thing that I'm like really curious about is like how much of that cash position, because really when you're buying into a treasury, you're really taking a cash position there. I mean, that's like, although you are loaning your money to the government, you are taking a super highly liquid asset there. I mean, you could turn it to cash immediately.
Yeah.
So it is kind of taking a cash position when you are buying treasuries. And that seems to be what a lot of people are doing right now. You can really see it inside of like the Fed's repo facility where a lot of people are dumping cash into that as well. So there's cash everywhere and it's looking for a place to go. And yeah, if there's a downturn in the market, I would imagine that those with the hands, with that cash in hand, they're going to be
That's
ready.
and that's why I share that perspective with your viewers to try to help people, right? It doesn't help me profit. It just helps the everyday person out there, the person who goes to work, get their boots dirty each and every day, right? Just trying to share with them what's going on in terms of the builders, the homeowners, and the investors, right? The builders have to build to make money, right? They have to build and sell. The homeowners, they're already sitting on 3% mortgages or somewhere near that. Chances are they're not going to be turning those over anytime soon, right? The investors, they're sitting on cash. They are ready to pounce. And so I think that's where each and every one of us needs to look and say, what sort of liquidity do we have, right? Or what can we create, in terms of liquidity, whether it's a home equity line of credit, go into our 401k and seeing what we can borrow from there, right? Everybody's in their own separate situation, right? I'm not saying this is a one size fits all for everybody. Everybody needs to, research it and make their own decision for what's right for them. But, like we're saying, the people with cash are sitting pretty. They're just waiting to pounce. And it looks like the home builders might be, we see cracks forming. I guess that's the best way for me to put it.
Yeah, one of the biggest thing that I've watched from the home builders, because really like the biggest issue that I saw take place for the home builders, besides all the rest of the stuff, was the lead times on material.
Yeah.
And that just killed them. I mean, it hit them hard. They were not ready for that. They were not, even prepared logistically for, something like the vinyl windows being 2.5 months out. So I keep my eye on those building materials, and you know that I work for a building supply. So I keep my eye on those building materials to see where the lead times are, how hard it is to get these materials, how expensive they've gotten. And those vinyl windows were the biggest indicator for me out of all of it, because it pushed, like I used to get a vinyl window in 10 days. And now, well, at the height of the supply chain breakdown, it took me almost 2.5 months to get a window. And that was just incredible for me. Like I tried to imagine being a builder. You decided that you're going to build a house, and the moment that you decide to build a house, you have to order the windows, because like the foundation, the framing, and then now it's time to put the windows in. And if you're 2 months away from that, your project's delayed, and that's expensive, right? So time is money on everything. So as I watch these building supplies out there and the lead times that were extremely long on a lot of stuff, especially those windows, I'm watching the lead times drop dramatically. And for example, the last time I ordered a vinyl window, it's come down to 20 days to get it, which, considering 2.5 months to 20 days, I don't know if that's going to continue, but that's what the last few windows I had ordered happened to be at. So I think, okay, well, lead times, that's time. Time is money. So is the supply chain breakdown coming to an end enough for the builders to be profitable on the lead times? You see where I'm getting at? It's like,
Yeah.
It was difficult for them, but what did I say? The pressure to try and get it completed with this issue of supply chain breakdown is being relieved, and I think that can add profit to the project. But again, we're still sitting and everything else is still messed up.
Yeah.
So that's just a small little window in there, you know?
Well, that only helps them if there's buyers there to buy those homes when they're, when they're completed, right? I just had a conversation with a realtor here in Florida, because I wanted to know what was going on her project. Again, they're built here in Florida. They're building on every corner. They got everything from new subdivisions to high-rise buildings going up, right? I mean, it's insane here in Florida. So that's why I figured I needed to get a footprint here to understand boots on the ground, right? Like I say, boots on the ground really helps you understand what's going on. So I spoke with her just past week and I said, hey, I have an investor looking to place some money. What do you have going on in your subdivision? Blah, blah, right? Just trying to ferret things out. And she's like, I have 7 homes completed that don't have buyers.
Oh, that's a new story, right? That's not the old story that we were hearing. Wow.
Nope. And she followed that by, I'm sure if you buy all 7, we can give you a good savings on that package.
I bet if you buy all 7.
Right. So
See what's out.
Right. I mean, it's just, yeah, the tide is turning. And again, I'm out there trying to help folks, and I've been doing this for, ever since we had low interest rates. It's like, guys, if you have a mortgage, refinance to a lower interest rate, get in that better position. It's never going to be this good, right? And some people took advantage, others didn't, and maybe now they're kicking themselves. But here we are again, we're in this position where we're saying, hey, follow the big money. The big money is getting liquid, right? They want to be in a position to buy, right? Whether it's buy lumber futures to be able, today for the future of things, buying land when builders and these landholders need to sell to be able to get cash to operate the business, right? We're all looking to do the same thing. And so again, here I am a year later sharing with folks, you don't want to miss this opportunity, right? So this is what we do. This is what we do all day long, right? We listen to smart folks like you, Simon, talk about what's happening in the market and in the economy and what's going on there in the lumber yard, right? What's happening? Boots on the ground, right? We're listening to other macro economists, right? Because it's not like it was during the pre-pandemic time. We didn't have to look at migration patterns. We didn't have to look at lumber futures. We didn't have to look at the jobs report. It was easy back in 2018 almost. Today, we got to look at migration patterns. We got to look at where businesses are setting up, right? We're looking at Alabama, right? Did I ever think I'd be looking at Alabama? No. The only thing I knew about Alabama was Birmingham. That's about the only thing that, right? And now we're looking at all these defense contractors and mega businesses that are putting up, a footprint in Alabama, and it's insane. Yeah, we got to be looking at migration patterns these days. And for some of the individual investors I work with, it's, I try to share with them, even though sometimes it may be scary to invest outside of our neighborhood, so to speak, you also have to position yourself for some of the better opportunities. And right now, if you're not in the South, I think you might be missing out, right? If you're not in, Arizona, Texas, Alabama, Florida, I mean, those are the areas where the migration patterns are happening, right? That's where businesses are going, right? They're not going to my home state. I will tell you that right now. And I have these conversations with investors up there. I'm like, why are you investing up here? I don't understand it. And I bring up things like demographics, right? And we look at this may sound weird to some folks, but we look at the 10-year-old to 15-year-old demographic, right? And some people would say, well, why are you looking at the 10-year-old and 15-year-old demographic? And I say, because I want to know if that demographic is growing or if it's shrinking, right? And so in my home state up north in New England, that demographic is shrinking. So there's less and less 10 to 15-year-olds in that area. So in 10 years, that's going to be your renter pool, right? So if there's less and less 10 to 15-year-olds today, right, that means in 10 years, they're going to be your renters. There's going to be less of those renters to be your clients for your investment properties, as opposed to down south, Arizona, Texas, Alabama, Florida, right? Those demographics are growing, right? So in 10 to 15 years, right, that's those young people are going to be your renters, right? And if there's more of them than properties available, then, obviously, the law of economics takes place, and, the price point is achieved, right, for those. But that's where I want to be. I want to be where the clientele is going to be in 10 to 15 years. So
Yeah. And that's the way you think about it. Like, 10 years down the road, like a lot of people don't do that. They're just looking at the price of the house and the location, but they're not really thinking about who it is that's going to be renting that property from them in 10 years. That is a brilliant way of going about it. Like, for those of us who have never been in the game as far as real estate or buying into rental properties or something like that, those are the type of things that you really need to know. Like,
yeah,
I mean, like you could have the perfect property, but that little piece of information right there doesn't fit, right?
yeah,
And
yeah,
now you got something to be concerned about, going into the, like, who's going to be there to rent these things.
yeah.
Very good stuff. Tony, you wrote a book. Tell me
I
about your
did.
book.
Yeah, so I usually have a lot to say. Yeah, I have it, like you mentioned, I have my I needed an outlet, right? Folks kept telling me I needed an outlet, so I started my Dirty Boots Capital YouTube channel, and folks can listen to my shenanigans there. If they need more shenanigans, I did write a book. It's called Freedom at Risk: How to Protect Your Personal and Financial Freedom. And so I created this book. This book was actually, it didn't, I share with folks, it didn't start out as a book at all, right? It was going to be like 20 to 30 pages to help my niece and my nephews understand how the world works, and how they need to position themselves to have greater freedom, right? They're not learning this in school, right? So for me, I felt that was important for me to share that with my niece and my nephew. So it came from a place of love, right? That's where it really started. And so I started writing it, and 30 pages turned into 200. And I said, oh, okay. I guess this is a book now. So I had to shift gears, and I had to get an editor and graphic designer and all fun stuff, which was cool. Good process to go through. And so this book is packed with information that I had been researching and studying since 2018, right? So it definitely comes at it from the macroeconomic perspective of how our freedoms are being stolen each and every day by people, propaganda, and profit, right? And so in the first part of the book, I hit on the topics of education, right? How institutions and their indoctrination process can steal our freedoms through the education system. In another chapter, I talk about government and how politicians are stealing our freedoms, right? I also talk about society in a separate chapter, how we ourselves ask for our freedoms to be stolen because we're looking for that warm security blanket, right? We need adults in the room to say, sometimes you're going to catch a cold and you're going to be sick for a couple of days, and you take care of yourself and you get better. We as society, we also need to understand we are in charge of that, not the government. Stop inviting the government in to solve our problems, right? So I talk a lot about society in the book. I also talk about the economy, like we're talking about here. What goes up must come down. And then I also talk about the monetary system, of how the monetary system is somewhat coming to an end here. It will eventually, right? I think we and your viewers know that. But, I quickly roll into part 2 of the book, which talks about the hows, right? The how to protect your personal and financial freedom, right? And that's kind of like we're talking about here, what we see, in terms of real estate, right? Just to, use that as an example. We're talking about, you and I are talking about opportunities with real estate, right? If you're going to be buying lumber into the future, maybe now's the time to secure the pricing on that lumber when it's low, because things may change in the future, right? I brought up land may be a good opportunity, or positioning yourself with a HELOC or a 401k loan, right, to be liquid, right? I talk a lot in part 2 of the book about the how-tos of protecting your personal and separately your financial freedom, right? Because not everybody resonates with financial freedom. Some people resonate more with personal freedom. So we talk a little bit about that. We talk about, opportunities of getting a second passport, right? Or citizenship, right? Some of those programs are pretty straightforward. Some are a little more costly, a little more difficult. But if you're a first generation American, you might be able to get a citizenship to the country that your parents migrated from, right? So that might be an opportunity to create more personal freedoms for yourself to move from one country to another more easily with that second citizenship and passport, right? We talk about, mind, body, spirit type things. Now, that's not sort of foo-foo stuff, right? We talk about getting your mindset in the right place, right? Don't listen to garbage from others, right? Try to find truth out there. Listen to successful people that you want to, be like, or people who are actually going to help you and not hurt you, right? So get your mindset straight, right? Body, have some type of movement, some type of exercise in your daily routine to stay physically fit, so you don't get sick, so you don't have to take drugs and pay money to the pharmaceutical industry, because that's a whole separate hour-long conversation we could have, right? So stay healthy, stay fit, right? In terms of the body, and then the spirit. For some people, that's it speaks to religion, which is great. If you're religious in some way, great. You go to a church or a temple or a mosque or something, that's great. That provides you some amount of peace in your life. And you and I both know, Simon, right? You and I both know we all live in very hectic worlds, right? And to find peace in your life sometimes can be difficult. So if you have some religion in your life that you go to a to a church, mosque, temple, where have you, and you achieve some sort of peace and some centering of yourself, that's extremely helpful. For those that don't subscribe to a religion, meditation, right? I meditate quite frequently, right? My world, as you can imagine, I'm sure your viewers can imagine, my world is very hectic, right? So for me, meditation is my choice to be able to recenter myself and have some peace for a few minutes when I need it, right? I elect when I do meditation because each and every day is different, right? So I go into a lot of different things with both achieving personal freedom, and then separately achieving financial freedom, right? And then the last section, the last part of the book, I talk about the freedom paradox, and I'm not going to give too much of it away, but basically it talks about this concept that I constructed, where we are never more free than we are today. Today is the freest we will ever be, right? And so I've dubbed that the freedom paradox. And so I'll leave that there. It's not a doom and gloom book. It's very much a how-to type book to help people have a better life, right? Have more of an abundance of things in their life. And that doesn't mean money or real estate. It's whatever they deem an abundance that they want in their life, right? So it could be time, an abundance of time in their life that they want to achieve, right? So this book gives them a lot of different ideas. It's almost like an a la carte package, right? You go through the first part, you understand how screwed up the world is and how it's playing against us. And then part 2 gives you that a la carte package of, hey, here's a bunch of different things you can do to help yourself. And that's really the goal of the book, is to help as many people as I can achieve a better return on life and more freedom for themselves.
Man, that is so awesome. I'm proud of you for writing that thing, because that's really what everybody needs, and is really a how-to book that can give them at least that brief overview. But what ends up happening a lot with people is like they'll start diving into macroeconomics. Like at least this happened for me, and I know a lot of other people tell me this as well. Is that once you start learning this information, you start realizing how depressive it really is. You know, and you start like losing hope, and you lose faith, and you know you get disheartened by the government. All kinds of stuff starts to happen from it, and it starts to drag you down. You wonder why you even did this in the first place, to try and take this information on, and then you realize that it's going to help you. It's going to benefit you to help you make the right decisions for yourself as you progress through. And because it was so scary before, because it was the unknown, taking it on is a scary thing, but the more you do it, the less fearful you are of everything.
Yeah.
And being aware of that it's overwhelming. Like guys like you and me, I don't think people realize like how much runs through our head, and how like I don't know about you, but I think about like what other nations are going to go through with like food shortages and stuff like that. Like I mean, I think about the pain that people are going to experience and stuff like that, and then I try to live my life like a happy life, you know, knowing that this stuff is going on. And when that stuff starts to spin in your head and you start getting the anxiety from it, that's where meditation really is the key to it all. Because like you're saying, once you have fed everybody this information, now they need to have to be able to process and deal with it. And having that in your book is brilliant, because I know for a lot of people, especially for guys like me, when I first got into it, it was stressful. It was a very stressful thing to try and take this information on. So thank you for doing that for your book, man. That's
Oh,
like, I mean, that's like the best, man.
well, thank you, Simon. I appreciate you. I worked very hard with my editor. She was brilliant. She was fantastic. I can't say enough good about her. We actually went back through the entire book with the sole intent of making sure, this is true story, we both went through the book, each and every chapter, to make sure hope and opportunity were spread throughout each and every chapter. We did not want this book to be a doom and gloom. We wanted it to be educational from the start and spread hope and opportunity. So as you read the book, you'll see those words throughout, and those messages, that this is not a doom and gloom situation, right? So for this book is great for, you know, young adults, right, that are maybe just graduating college, looking to start, you know, in the world, right? So it's so to speak, you know, I don't want to say dumbed down, but it's, you know, with macroeconomics, you can go pretty deep into macroeconomics, as you said,
Pretty
right?
complicated. Yeah, people's eyes glaze over real quick, you know.
And so this isn't written for the Milton Friedmans of the world, the Adam Smiths, and the, you know, the economists out there, right? This is written for the everyday type person, right? So I think folks will find it a pretty easy read. It's pretty easy. The feedback I received was it's pretty easy to read through each one of the chapters, and they actually get something from it. And one of the best pieces of feedback I received was it was a better book than Rich Dad Poor Dad for one reader, which I thought was
Great compliment.
yeah, the hair on the back of my neck just stood right up when he was telling me that. He said it just provided great the how-tos, right? It went beyond the Rich Dad Poor Dad. Don't get me wrong, that's a great book. I read it. I've given several copies, if not 100 copies of that book away to folks along the way. It's a great book, and I encourage folks to read it. But where it kind of fell short for this one reader was it didn't go deep enough into the how-tos of, you know, protecting yourself and growing your wealth, if that's what you're looking to do, or grow your freedoms if that's what you're looking to do, right? So yeah, it was a great compliment. I was very pleased. Yeah.
Awesome, Tony. How can we find your book?
So you can find my book on Amazon or Barnes & Noble. Again, Freedom at Risk, How to Protect Your Personal and Financial Freedoms, looks like this. You can also look for me at freedomatriskbook.com if you're looking to purchase multiple copies of the book for stocking stuffers or anything like that for friends and family. I do offer some free free bonuses if you buy 3 books or if you buy 5 books. So I have some great free bonuses for folks who buy multiple copies. So go to freedomatriskbook.com. And yeah, if you're looking for more of my shenanigans, you can always find me on my YouTube channel, Dirty Boots Capital.
Thank you so much, Tony. Man, I really appreciate you coming on and hanging out with me for a while.
Thank you, Simon. I appreciate this. You're awesome, man.
All right. You have a great night.
You as well. Thank you.